Hi, I'm Michael O'Leary from Buy the Book Taxes, and this week we're going to talk about a little-known concept called reasonable collection potential, or RCP. I call this tax resolution's secret sauce, and in a few minutes I'll explain why. If you can't pay your tax debts in full and you want to work out something with the IRS, how do they determine how much you can afford to pay them and what will they accept as an offer number? Last week we spoke about installment payment agreements where essentially you can pay the IRS back in full over a period of time through monthly payments. But now we're talking about not being able to do that. So there are two resolution options in addition to the installment agreement, and they are currently not collectible and offer in compromise. The offer in compromise is what you hear everybody screaming about on those TV commercials where they say, if you owe more than $10,000, please call this 800 number. But back to the point, the IRS has a formula called reasonable collection potential, or RCP, that they use to determine how much they believe you can pay and what they will accept as payment in settlement of the debt. Reasonable collection potential has two components in it, called net equity in assets and future income. Here's what the IRS is asking. They want to look at all your assets: cash in the bank, homes, vehicles, investments, retirement accounts, brokerage accounts, pensions, Social Security, all of that. How much of those assets can you access by withdrawal, by sale to generate cash to pay back your tax debts? They use a formula called the quick sale value, figuring that if you have to sell these things in a hurry, you're not going to get full value of them. So take those non-cash assets that you have to sell. Take 80% of their market value and then reduce that by the amount of any loans or mortgages that are outstanding against them. What you are left with after harvesting all these assets, paying off the loans and mortgages, is what is called net equity in assets. How much cash you have left basically after a fire sale of your assets. The second component is what they call future income. Now, it's a little deceiving when they call it future income. It's not just income, but it's all cash that comes into your household in a month. So it could be wages, it could be inheritance, it could be pensions, it could be anything. All monies that come into your household in a given month. That is offset by what your monthly living expenses are. Now, the IRS doesn't just take your actual living expenses. They have a term called allowable expenses. They get their living expenses from statistics supplied by the Department of Labor. So what they will allow you to take as expenses is some combination, depending on the expense category, of your actual expenses, a national standard, or even a regional and local standard to calculate your allowable expenses and thereby determine how much net cash do you have each month left over that can be used to pay your tax debts. For offers in compromise, you can make an offer based on 24 months of your future income or 12 months. So that's why you could see two different calculations. And I give an example here of different expenses that may be that may use the actual expense or the national standard or the local standard. Okay, so now we've calculated what your net equity and assets is, and we've also calculated what your monthly net cash flow is. For a 12-month offer in compromise, take 12 months of that net number. Add it to your net equity and assets. That's your reasonable collection potential. Now, here's just a couple of calculations. If your reasonable collection potential is greater than your tax debt, the IRS will not compromise with you. They will expect that you will pay the tax debt in full using an installment payment agreement. If your reasonable collection potential is less than your tax debt, that's the number you should make as an offer in compromise figure. That's the number you should offer to the IRS to settle your tax debts. If your reasonable collection potential is at or near zero, you are a candidate for currently non-collectible, because that would mean that if the IRS enforced collection upon you, it could create a hardship for you in your daily life. So that's basically how it works. If you have years of unfiled tax returns or unresolved tax debts, please call me. Here's the contact information. I can help. See you next week.